Hey everybody, welcome back to the Economic Analyst channel. In this video, I'm going to go over the impact that the Russia-Ukraine war has had on U.S. markets and to a broader perspective, the U.S. economy. So essentially, the factors that have been going on with the Ukraine war are now overshadowing the inflation that we've been seeing increasing for the past year and a half, as well as the recent bump up in interest rates. And I'll show you the charts in just a second, but essentially, what this does is that it creates instabilities that make it more difficult for profitable returns to be generated among trading and producing goods and services. Therefore, financial contracts that go into investing in the production process of goods and services, aka money that goes into companies or stocks, tend to fall. And virtually all alternatives tend to increase. So what we've generally been seeing is that we've been seeing an upward pressure on bond prices, cryptos, commodities, dollars, and precious metals, and a downward pressure on stocks. So the name of the game right now is not to own stocks. We've seen a surge in gold. We're seeing a surge in silver. We're seeing a surge in bond prices, if you can believe it, which means that interest rates are actually staying steady and holding lower. We're seeing a surge in commodity prices. But what we're not seeing is that in stocks. Why? Because basically the investment opportunities are diminished from the sanctions, trade is being restricted, and profits will more than likely take a hit on this. So the Wilshire 5000 has corrected down by almost 10% since the beginning of the Ukrainian war. The Dow Jones has dropped 7.5% in the last month. The NASDAQ 100 dropped by 10%. And Bitcoin did have a resurgence when the war began, when Russia began to invade Ukraine on February 27th, but it's now dropped back down. So, Bitcoin overall is still suffering losses from where it was a month ago. And of course, the major loser here is Cathie Wood's ARK ETF, because quite frankly, I don't mean any kind of ill will on her, but it was pretty foolish to be bullish on stocks given the pessimistic economic environment now. Namely speaking, when we take a look at quarterly growth in the U.S. economy, the Atlanta Fed is projecting now a flat growth rate on an annualized basis for GDP. So GDP is actually forecast to be flat right now. They did have a slightly contracting in the first quarter. And if we had two consecutive quarters of contraction, that would qualify as a recession, according to the Bureau of Economic Analysis there, the BEA. But yeah, all of this with the Ukrainian situation and the Russian wars and the backlash, the economic sanctions, the cutting off of global payments, the risks of rising default rates, is definitely causing a rush out of stocks and into stock alternatives. Now, the question becomes, will this, be the pin that pops the bubble? It could be if it drags on long enough. It's difficult to really estimate on this, on whether the Ukrainian war situation is additive to the forces that we're already seeing or cumulative. Does it expand on this? Because it increases the inflation rate, does this cause investors to realize and start really withdrawing their money in hordes out of the stock market and cause a full-fledged bear market and a full-blown rally and a bull market in stock alternatives, namely speaking precious metals and commodities in particular? Or is this just a temporary thing because the Ukrainian war situation is going on? Time will really tell on this, and that's the only thing that can say it. I know that you've been watching my channel, and if you've looked at my videos, I've produced model after model and chart after chart showing you these types of potential outcomes that could play out based off of economic forces. Geopolitical forces are completely different in this, and the only thing I can say is that it will create more instability and more volatility. In this case, it's definitely going to be bullish for precious metals and commodities. I can't say the same for Bitcoin and cryptos, but in general, the precious metals are going to be the play. The commodities are going to be the play. We're certainly seeing that manifest in the respective investment markets right now. So, as such, it's difficult to quantify. The only thing I can do is tell you how much economic forces are at play. So if you're looking to see, well, okay, gold's pressing up to $2,000 an ounce, what's going to happen a few months from now? Well, my guess is that a lot of that's going to depend on how bad the war drags out with Russia and Ukraine and the economic fallout from it. The more that we see pains being taken and spikes in prices of certain goods and resources and shortages, then the more upward pressure that will put on gold and silver. But be warned here. Be warned here. Just because we're seeing this uprush that in gold right now doesn't mean that this is the sustained bull market trigger that I have been telling you about to watch out for. Because even though gold has surpassed its 1870 barrier here in November, and it has surpassed where it was in May of 2021 at over 1900. And it's even surpassed its 1950 barrier back in January of 2021. And it is beginning to run up to its August 2020 ceiling. It doesn't. You have to remember, this is geopolitical in nature. So be warned about this. If the geopolitics tends to change, and it very well might, say Russia and Ukraine come to some type of peace agreement, or the war comes to an end, or Ukraine is able to push out Russia, or Russia is able to conquer Ukraine and take over the area, then we can see some of this reverse, and we could see a falling in gold and silver as we start to see a stabilization. On the other hand, if we start to see entrenchment between a new Cold War between the East and the West, and especially with other potential geopolitical tensions, say China decides to start antagonizing Taiwan out of all of this, then we could see these precious metals press up forward. I wish I could really give you a quantification on this, but I can't. The only thing I can tell you is how much I think the economic forces are having a push or pressure on commodity prices or investment prices right now, especially in precious metals. That's been my forte, and the downward pressure it could have on stocks. But I can't tell you about the geopolitical forces. And right now, that's completely overshadowing the inflation interest rates. Eventually, though, these forces are longer lasting. This is temporary. And, eventually this will resume, and we will see the overtaking of the forces with inflation and interest rates being pushed up, again, overshadowed the Ukrainian situation. But my guess is that at least for the end of this quarter, till the end of March and possibly onward, the Ukraine situation is going to take precedence. And if we get the onset of another Cold War, that could really overshadow the inflation and interest rate motives for quite some time, and it may dominate at least the first half of 2022. So keep on the lookout right now. If you haven't bought precious metals yet but are thinking about it, my advice to you, and I say this not being a certified financial analyst, I'm saying this as a person who tells you that precious metals tend to be the safe haven go-to, buy precious metals. If you're not sure about it, then buy commodity ETFs. This is one right here. This is the Invesco DB Commodity Index Tracking Fund. It's rallied by over 20% in the last month, and commodities will likely press up even further from here. Oil is going up. We're already seeing issues prop up with wheat. We're seeing some situations develop with lumber, and there's going to be other types of minerals, raw materials that will come out where there's just issues fulfilling shipments, and the supply chain bottlenecks and all of that, along with general inflation. So this is something that I've been watching and seeing how it would play out, and largely it's as I expected. I apologize for not uploading a video sooner, but I've just been monitoring to see if this was going to be a short, quick invasion, and there might have been some kind of armistice, or Russia would take Kiev, or if this was going to drag out. And it looks like this is going to be dragging out for some time, which will cause a lot of volatility in the stock market, as well as stock alternatives. So just keep that watch on there. The next video I'll release, though, is definitely going to be on the inflation numbers update and what's transpiring there. That's what I'm really waiting on more than anything else, to get a grapple on just how much of an effect that we're seeing from the Ukrainian-Russian war, and how that's having on prices, and how that's going to really cause markets to behave. And that I can put into my economic models. And then I'm looking for GDP updates that'll come out later on at the end of this month. So keep on the lookout. So minimum of 3 videos will be coming out in the next couple of weeks on that. The CPI, the Producer Price Index report, as usual, and then the gross output final revisions to third quarter GDP analysis. Once again, guys, I thank you for watching this video. If you like the content that I provide, make sure you just click that like button, subscribe to my channel. If you haven't already, click that notification bell so you're notified as soon as I do upload a video. I thank you for watching this material. Drop me a comment. Let me know what you think. Let me know if there's more to this that you see. And also, if you can provide some insights and perspectives on how this develops. This situation that's going on is certainly a first for me. But I have been paying attention to it. My eyes have been glued to the news over the past week and a half, as we're seeing the situation deteriorate even further in the Russian-Ukrainian situation. Once again, guys, thank you for watching this video, and I'll talk to you next time.